Patience, be a long-term investor, be prepared financially and psychologically to live through a series of bull markets and bear markets, because in the long run, common stocks will pay off enormously.
So in all my presentations, I read some of his most famous quotes because it's a really good reminder of how he thought about the markets. The first is, bull markets are born on pessimism, grow on skepticism, mature on optimism, and die on euphoria. The time of maximum pessimism is the best time to buy, and the time of maximum optimism is the best time to sell. A major cause of higher prices is simply higher prices. But when the trend is reversed, lower prices lead to still lower prices.
To buy when others are despondently selling and to sell when others are avidly buying requires the greatest fortitude and pays the greatest reward.
An investor who has all the answers doesn't even understand the questions. People are always asking me where the outlook is good, but that's the wrong question. The right question is, where's the outlook most miserable?
We never know when it will change. Each day we buy that thing that is most depressed in price, and eventually most of them recover. But we never know. We have to hold things very patiently. Average holding period of 5 years in order to profit from buying things at the right time.
If you want to have better performance than the crowd, you must do things differently from the crowd.
The right time to buy shares in a common stock fund, or when most people are not doing it.
Hi, it's Lauren Templeton. It's a beautiful day in Tennessee, and I'm sitting here enjoying my new copy of Value Investing Simplified by Caden Chang. It's a great book. I hope you pick up a copy and enjoy it yourself.
Hi, this is Caden from VIA Value Investing Academy. Just to let you know that just yesterday I arrived in Singapore from a colder weather autumn in Japan, and it's good to be back to such a hot place where I don't need to wear any winter clothing. Okay, but before I start, can I just double check that you are able to hear my voice? And I'm going to share my slide right now just to make sure that you are able to see my slide as well. Just give me a second. Let me put it to a full slide mode. Okay, good. Can you just double check whether can you hear my voice? If you can hear my voice and see my slide, is it okay? Just type 1 in the chat box. Zen say welcome back. My next trip will be in February, and that will be like mid-winter. Temperature around there, maybe autumn is about 10 degrees Celsius, which is fantastic, right? Okay, so now Zen can hear me. Zen is the only one out of the 67 that can hear me, so which is good. Now, so let's get started. Just now, my colleague has played a video which was spoken right by a very famous value investor. Her name is called Laura Templeton, and there is a very senior man inside this video, right? And this senior man is called Sir John Templeton. Now, just to let you know that Sir John Templeton is a very famous value investor, and if you are not very familiar about him, you can always Google about this person called Sir John Templeton. So this Sir John Templeton is actually Laura's Templeton, a great uncle. So these two are directly related with a Templeton surname, right? So I think way back in 2018, I brought Miss Laura Templeton to Singapore. We have run a very huge event, I think for 750 people, and it's called Investify Symposium 2018. So I really miss her in some ways, but luckily we are still connected via Facebook, right? Yeah, so just to let you know that in a short video of 2 minutes, it shared a great number of important evergreen lessons. So let me just share with you the first lesson using a screenshot. So in one part of the video, Sir John Templeton said that the time of maximum pessimism, that means people are feeling very sad, right, is the best time to buy. This first sentence is very important. And the time of maximum optimism is the best time to sell. Now, this is very similar to one quote spoken by Warren Buffett, where he said that the best time to buy is when most people are fearful. People are selling. Price tends to be lower. And the best time to sell, right, is when people are greedy, when the price tends to be high. So John Templeton say in another way, but they have the same philosophy. Best time to buy is always down. Best time to sell is always up. So let's relate back to their advice, just to let you know that these two people are some of the most successful investors of all times. And let's check right now, right, in terms of the stock market climate, are we on the maximum pessimism, or are we at the end, right, of maximum optimism, so that we know is it the best time to buy or the best time to sell? Now, if you look at this graph, this dates way back to the, sort of the beginning of the pandemic. Yeah, beginning of the pandemic, right? So that was in 14 February, Valentine's Day, pretty easy to remember. So the peak, right, of S&P 500 was about 3,380 points. So here is optimism, right? People are happy, right? People are greedy. Then subsequently, the COVID came. Can you see the price drop? Drop, right? Yeah, from this point to this point over here. Now, the drop is about 33.9%. Technically, if the drop from the recent high, which is here, to this low, right, if it's bigger or equals to 20%, it's a bear market. So that means it's the point of pessimism, right? So now the question is, at this point, how many of you actually bought some good business? Yeah, so this is a bear market. And then subsequently, interestingly, right, the share price gone up, at least for S&P 500 gone up, even though right now it's also a bear market. Yeah, so it's gone up by 76.9%. And if we zoom into the most recent few months, can you see here? Today is 17 November, right? This point, 76%. So if you look at the most recent couple of months, you can see that on the 4th of January 2022, the most recent high was at this point. Yeah. So then on the 16th of June, right, it dropped to 3,666, which means that the S&P 500 has dropped by 23.5%, which also means that, remember, 20% or more is a bear market. Now, subsequently, for some strange reason, price just gone up, and then it drops again until here. So the key thing for this slide is just to let you know, since about June 2022, right, we are in a bear market. It's a point of pessimism. So of course here is a maximum pessimism. Now, if you miss this chance to buy, then can you see it appears again? Now, even though right now the share price has recovered just very slightly, overall, right, from this point to this point, the entire market represented by S&P 500 has dropped by 17.4%. It's still close to the bear market. Yeah. So what's my point, right, in showing all these things? Now, my point of showing all this graph is for you to understand, are we at moving? Are we at the zone of maximum pessimism, or are we at the zone of optimum, what am I saying, maximum optimism? So that you know, is it the best time to buy right now, or is it the best time to sell right now? But sometimes it's easier said than done, because this is like a bit academic, right? So let's look at the second lesson, right, that Sir John Templeton has said, to buy when others are despondently selling. Yeah, which means that the price is dropping, yeah, and sell when people are greedily buying. It's not easy, and he stated very clearly, it requires the greatest fortitude and pays the greatest reward. Now, in simplest terms, is if you don't buy during the bear market, you have no chance to sell when the bull market comes. Yeah, very important. So right now, we are still at the bear market. And remember, who is Sir John Templeton? Arguably the greatest stockbroker, right? Stock picker, not broker, stock picker of the century. So it's very important. So let's look at S&P 500 as a whole, right? Dating way back to 1952. Now, there are only a few things we need to know. Is as long as you're buying stocks in your entire lifetime, right, you will definitely go through some sort of bear market and or all recession. So for example, 1952, can you see? Low, right? Can you see all this point where I've marked using this tiny little red circle? In your entire life, you definitely will get any sort of bear market or recession. Now, if you have not been through and survived any bear market recession, you are not a stock investor. Yeah, so in case you see some people very young, right, ask you to do option trading, and a person look too young to have been through any bear market or recession, yeah, the fella is not an investor. So let's come back to here, right? Yeah, so there are a few things you need to note. The first thing you need to note is every 8 to 10 years, there will be at least one bear market and or recession. That's all you need to know. So let me write a summary over here. So about 8 to 10 years, it varies, right? But you will definitely get either a bear market, yeah, or a recession. Or recession is the first thing, right? The second thing you need to know is after every bear market, it will always be followed by a bull market. So this is the second thing you need to know, which means that no bear market in the entire universe, as far as US economy is concerned, will last forever. You'll be followed by a bull, second thing. And the third thing is the bull market, right? Whatever bull market that comes usually is higher than the previous bull. Can you see? This bull run over here, can you see? This, right? Most likely is higher than the previous bull, which is why overall S&P 500 has only one trend, which is an uptrend. Yeah, but in order for you to harvest this result, your time horizon has to be a long-term investor so that you can ride through the cycle of a bear and a bull. But if you're a trader, your life is going to be very, very difficult. Yeah. So remember, these are the three things you need to know. And right now, we are at a bear market, right? Yeah, which means that right now is a golden opportunity because it only takes place every 8 to 10 years. It's like the stars are all aligned, right? Or you see the lunar moon or whatever. Yeah, or moon eclipse. Yeah, so this is the best opportunity for us to buy. And if you look at what Warren Buffett said, there is no way you can bet against America and win. Yeah, so even though right now is a bear market, you need to know what to do, right? Yeah, you cannot anyhow buy a stock, right? Now, just this afternoon, there's someone, right, whom I do not know. He posted a comment on youtube.com saying that he's interested in some companies such as Grab. And he lists down all the companies that are losing money. Yeah, he said, I'm going to buy all this company, and then if the bull comes, he's going to make a lot of money. Okay, I have nothing much to say because he's dealing with his money. He's not dealing with my money. Yeah, so it's okay. Like, he can do whatever he like, right? Yeah, so it's important for us to know what to do, what to invest in. And it's also just as important to know what not to do. For me, I wouldn't do what he's doing, buying companies that have been losing money and then it may not be making money. I think this is quite dangerous. But, you know, again, it's his money. Yeah. And of course, second thing is to have cash to do it. So let me just give you a very quick example of maybe what not to do. But remember, I'm just sharing my opinion, right? You do not have to agree with my opinion, but you just need to see whether it doesn't make sense. Just recently, which is on 28th of October, I saw this article, right? And there is this company called NoonTalk. I mean, I'm slightly familiar with this company because we rented one venue at NoonTalk. Yeah, so NoonTalk submits a preliminary prospectus with SGX. In short, right, NoonTalk want to IPO. And this person, if you watch the Chinese channel, you know his name is called Desmond Koh. So Desmond Koh is the founder, right, and the CEO of NoonTalk. So now he wants to IPO his company. Now, just be very careful if you have not bought stocks before. The moment you hear IPO, wow, you think that, all the companies, if they survive this IPO, they must be some great deal, right? But remember, we need to know what to do and what not to do, right? So let's look at some of the information that I've seen. So what they did was, remember the article didn't share too much detail, but they share some information. For example, they shared that for past 3 years, right? Financial year 2020 to 2022, they have a revenue of 3 million, 3.3, 6.3. Now, just to let you know that a 3 million is a very small company's revenue. It's very small. But to a layman, if you think a 3 million is very big, but it's actually a very small company. But remember, right, revenue is vanity. We want to see minus all expenses, what are left. Now, let's look at the company's profit, in which sometimes the term is also called earnings. So, in other words, the revenue of 3.04 million, whatever is left is only 73,000. Okay, then the next year, right, is 3.83 million, right? And minus all expenses is only 189,000. And this one is even more interesting. This one is 6.37 million. And minus after expenses is only 22,000. I think an average Singaporean salary is about 48,000. Yeah, so in other words, actually, no need to buy his company. You just need to find a job to work can already. Yeah, so if you look at this, it doesn't make sense. So if a director's salary maybe is 100K, yeah, so do you want to invest in this company? And what I did was, I did something very simple, is to calculate something called net margin, right? So for example, a net margin 2.43%, what does this mean in simple terms? It simply means that if the company make $100 of revenue, not profit, yeah, the whatever profit level is only $2.43. Yeah, so now the question is, assuming that the IPO is successful, I think they want to raise about 4 million. Yeah, when they want to raise 4+ million, what does it mean? It simply means that Desmond Koh, being the largest shareholder, he wants to sell away his shares of NoonTalk to you as an investor. Yeah, so right now as investor, do you want to give him, yeah, as a consolidation, do you want to give him 4 million, yeah, of your money to him so that he can run the business? In which currently, right, his business is having such a net margin. For me, I won't. I'm not very sure about you. For me, I won't, because if he cannot manage a small business like this with such a tiny little margin, right, give him money also no use, because he's going to waste the money away. Just to let you know that this is my opinion, right? For a company, service-related company, I think he's a very asset-light business. I would expect a net margin of minimum, right, bigger than 20%. Yeah, small company, you have 2%. My conclusion is the management, I think, cannot make it. But again, he didn't review any detail of his salary. It would be good to understand how much did he pay to himself, right, so that the margin is so thin. Yeah, so which is why it's very important for us to know what to invest and what not to do. So the NoonTalk, I think, is an example of what not to do. Yeah, and then you have to be very careful, right, because the cash is yours. So the things that we shared, as much as we can, we want to provide very factual and, of course, sometimes our opinion. And all the important things that we shared are all found in our YouTube channel. We really spent many years trying to do it, right? And it's at youtube.com/Value Investing Academy. So I put a QR code over here. We have about 100 people watching this. Yeah, so if you don't mind, I'm just going to pause here for a few seconds. I just need your help. Can you just use your phone, right, to just scan this? Just support us by subscribing to our channel, so that in case there's some very interesting thing that we saw and we noticed, and we can keep you informed. For example, NoonTalk is an example that once we see it, we want to keep you posted so that you know what not to do. Yeah, I'll be very interested to know who actually buy the IPO. Yeah, buy the IPO. So I'm just going to pause here for a short while with the QR code over here. If you don't mind, can you just scan one message pop out? Just click on subscribe and that's it. So you'll be the first to inform, right, whenever we have very, very useful educational material. Yeah. So good, everything seems to be fine. Yeah. Okay, there are about 100 people watching. Thanks for sparing the time. Help us subscribe if you don't mind. Yeah. Okay, so let's get started. Today's session is going to be very interesting. Today we're going to talk about maybe this is something that you want to do. Yeah. And there are many ways to find ideas on investing. And one of the ways is really to pay attention to the best of the best investors and see what they do. But of course, even though we want to model, we don't want to just copy shamelessly, because sometimes they also make mistakes. Yeah, so if we copy them, we may also copy their mistake. So I think it's better for us to know what they're doing, and then we have to think it through, right, whether does it make sense. So tonight, yeah, it's very interesting because we're going to talk about what 5 super investors are doing, and we're going to talk about some of the companies that they're investing and see whether does it make sense to you. And when I talk about companies, it also includes ETFs or exchange traded funds. But before that, I think I better highlight some of the key disclaimer. Now remember, right, VIA or Value Investing Academy, we're not licensed by MAS, so in other words, we cannot say, hey, buy this, buy that. No, it's quite dangerous, so we won't do it. So I think we better tell you some disclaimer. So remember, under no circumstances does any of the information provided tonight, either by me or Hillary, represent a recommendation to buy, sell, or hold any stocks. Remember, don't do it. So because we do not know you individually, we do not take into account your individual characteristic profile or risk appetite of you. So remember, in no event shall VIA or me and Hillary be liable to any one of you, guests, third party for damages of any kind out of the use of any content shared here. So remember, this is my last part, right? Neither My Kinesis Investments Private Limited, VIA, nor me and Hillary are operated or affiliated with any broker, dealer, or licensed financial advisor. Yeah, but it's okay for you to hear, take into account the information and see whether is it helpful or not. So let's get started, right? Now, since today we're talking about 5 very good investors, so I think it's important for me to share with you what kind of mechanism do they use. Now, some of the most successful investors, stock pickers, right? In the entire planet, I think more than 95%, right? They are all value investors. In other words, they practice this methodology called value investing. Now, value investing has been around since 1920s, and it has evolved. Initially, when value investing was founded by Benjamin Graham, right? There is only one philosophy to describe value investing, and value investing is described as by the word cheap. So in other words, Benjamin Graham only liked to buy cheap stocks. Whether good, bad, it doesn't matter. So he will buy a whole spectrum of companies, and maybe X% will close, right? And a Y% will survive and do well. And if Y is larger than X, so overall he will make money. So that is the philosophy of Benjamin Graham in the early days. But as time evolved, Warren Buffett, right, being the disciple of Benjamin Graham, he modified value investing a bit. Right now, value investing includes a portion of growth component, so that right now, right, Buffett only want to buy good business, that can grow, and he want to buy it at a cheap price. So of course, right now, Warren Buffett became the poster boy of value investing. So that's in short. So today, since we're talking about value investing, we better put Warren Buffett's face, right? Because he's a poster boy. And just to let you know that other than Warren Buffett being a value investor, there are also many other famous value investors. Charlie Munger, which is the vice president of Berkshire Hathaway. And then Michael Burry, we have Marc Faber, and the other one is called Joel Greenblatt. Out of these 5, I think the more so-called popular one are Warren Buffett, Charlie Munger, and Joel Greenblatt. Michael Burry, maybe some of you may not know, and this Marc Faber, maybe you do not know, but it's okay, which is why we are all here to learn, right? So what I'm going to do is I'm going to talk about just one specific person, which is Warren Buffett, and then subsequently I'm going to hand over to Hillary, and Hillary is going to talk about the other 4 super investors. So let's start with Warren Buffett, which is the first thing we're going to talk about, and then we talk about what are the companies that he has invested, right? So Warren Buffett, for me, is very familiar. I'm not very sure about you, but he's one of the richest men in the world. He's the chairman and CEO of his own company called Berkshire Hathaway. And as of now, he's the #1 investor of all time. Sometimes people also call him the Oracle of Omaha, right? As though he can see things into the future, right? And he's one of the richest men, 6th wealthiest person. But this rank changes very often. And his investing strategy, right? It's called value investing. In short, is to buy a good business, can you see, at a cheap price, which is a discount. And of course, his trick is to hold for a long term. He's not a trader. Trader try to do scalping, all this, he don't. And the way he look at it is he don't see a stock like a number that wriggles upwards or downwards, right? Behind every stock there is a business. His purpose is to own a business. His purpose is not to guess share price, which is speculative in nature. And he only invests in businesses that he truly understands. If he doesn't understand, even if it's good through someone's eyes, right, he may give you a miss. So remember, if you get a miss, doesn't mean that it's bad, right? It's just that he don't understand. So one of the key reasons why people lose money is because they buy something that they don't understand. Which is why the NoonTalk, I think before you plow in your money, you really have to think it through, right? What is happening? But from the numbers, I will give you a miss. So let's come back to here, right? Now, if you want to know like how good or how bad Warren Buffett is, just need to Google Berkshire Hathaway click on one of the search results, right, you end up with his official homepage. Now, how do you know his official homepage? Because he bold up, no picture, whatever, right? Yeah, so his website is one of the ugliest I've ever seen, but I mean, he's the #1 investor, right? Who cares, huh? Yeah, so even he comment, I don't think he cares about opinion. And I don't think he read comments on Facebook, right? Yeah, so if you click on this button, what does this mean? Now, Warren Buffett writes yearly letter to his shareholders, which means that if you buy Warren Buffett stock Berkshire, he will upload his letter, and then he will tell you, right, teach you, right, what are things that he's doing. So if you really want to know the technical part of why Warren Buffett do what he did, and then how he invests, you can click on this one. So if you click on this one, you end up with like a list of PDF files, right, and you can click on the latest one. So the latest one was shared about Warren Buffett's performance versus the S&P 500. Now, the reason why he used S&P 500 is because bigger equals to 90% of professional managed funds cannot beat S&P 500. Yeah, which also means that if you buy Berkshire, of course, you want to beat S&P 500, right? If not, must as well you buy S&P 500. So how do you read this? Maybe I start with the first line first, right? Now, this also means that, let's say in 1965, when Warren Buffett's company Berkshire produced a return of 49.5%, S&P 500 only produced 10%. It's better than S&P 500, right? Correct, huh? And then during the bad days, when it's negative, right, 3.4, S&P 500 is even worse. Yeah, so if you want to judge a performance of any funds or investors, you need to see long term. You cannot see 1 year and then say the person is very good. So let's look at the span of great number of years from 1965 to 2021. So you can see, right, S&P 500 produces an annualized return of 10.5% with dividends reinvested, and Berkshire produced 20%. So this is better than this, right? Yeah. So for myself, I personally invest in S&P 500 as well as Berkshire, because if I can live very long, I want this kind of return, right? 3.6 million. Yeah. So sometimes business change over time, but if there's some business I want to hold forever and ever, right, and then bring it to my grave, there will be two. One is S&P 500, because over the long run, it has really good track record. I have no intention of selling, right, unless I really needed money. Another one is Berkshire. Yeah. So these two is, I'm not going to trade, I'm going to hold long term. But remember, this is not advice, so I'm just sharing with you my thoughts. Now, so let's look at, so since Warren Buffett is the #1 investor all times, yeah, most people wanted to know what Warren Buffett is doing, as though he's your neighbor, right? You want to peep and what are things that he's doing. Now, these are the latest, as of this afternoon, top holdings of Warren Buffett as of September, because we only know some is transaction quarter by quarter, right? His #1 holdings in terms of the weightage, right, is actually Apple. So can you see the weightage is about 41%, almost half, no? Which means that if you find Apple stock too expensive, you can buy you can buy, for example, let's say a Berkshire, like a proxy, right? It's a proxy, yeah. So which means that if you own Berkshire stock, you are owning a 41% Apple. So these are some of the companies that he has invested, and then just very recent, there's a new buy. Can you see? He invested in this company called TSMC, or Taiwan Semiconductor Manufacturing Company. Now, if you're an investor, you would probably heard about this company, TSMC. TSMC is the largest semiconductor chip producer in the entire planet, and interestingly, is in Taiwan. Yeah. So do you see why US is very interested in Taiwan? Yeah. In case you think that US is very interested in Tsai Ing-wen, right? No. It's TSMC that they're interested. I don't think they care about Tsai Ing-wen, huh? Yeah, so that's TSMC, right? Yeah, and interestingly, we talk about this TSMC, right, 2 months before Warren Buffett bought it. But at that point of time, we just find that it's a bit too expensive. Yeah, it's a good business, but it's expensive. I personally has not bought it yet. Yeah, but if you're interested, you can watch our video, the analysis, and so on. Yeah, and of course, today we're not going to talk about TSMC. We're going to talk about this company called Occidental Petroleum. Yeah, it's a bit technical. I'm not so good with a petroleum company, but we'll just give you a brief, because he's recently, he has been buying this business for the past, I think, since 2019. In other words, for the past 3 years, he's been buying. And he's been buying a total of 9 times, 9 occasions. Wow, he's really interested in this company. So for tonight's context, right, we talk about Warren Buffett, and I'm going to share with you the companies that are interested. Then you go and do your stuff, right, think it through, or whether does it make sense. Yeah, so this company is called Occidental Petroleum. The ticker, right, or short form is called OXY. Oh, it's 8 rounds instead of 9 rounds, right? He has been purchasing this company way back to 2019. Average share price is about $61. Right now, I think it's about 71. So he currently owns about 3% of Oxy in his portfolio, And these are some of the things that this company do. Yep, it's an American hydrocarbon exploration production company. Wow, sounds really technical. Yeah, produce energy and chemical products. Yeah, so in short, they operate in 3 business segments. One is called oil and gas. Now, I just want to let you know that I'm really bad into oil and gas. The entire supply chain is very engineering. You know, I'm a biology grad, so I find this really difficult. Yeah, so if you don't understand, which is outside circle of competence, you can always give it a miss. But I'm just sharing with you what Warren Buffett is doing, right? And the next one is the OxyChem, right? And of course, carbon innovation. And then recently, there's one debate, right, between one of our MP, I think it's called Grace Fu, and the Workers' Party, what's his name? Workers' Party, the professor, right? Yeah, James. Yeah, 2 of them were talking about the carbon tax and so on. Yeah, so this is in summary in the company. So let's look at the revenue. If you look at the revenue, it seems to be very cyclical because from 2011, it goes a downtrend, right? Comes here and then goes back up. Yeah, so from 2016 onwards, it looks quite okay. Quite okay, huh? That's revenue. But remember, revenue is a vanity, right? We want to see the sanity. So the sanity is the profit per share. If you buy 1 share, what's the profit? We want it to be uptrend. But it doesn't seem to be this. It seems to be going down and then going up. It seems to be in a very cyclical business. So this is something very interesting. So why would Buffett buy something, right, where the EPS is not going straight up but it's cyclical? So let's explore. So just hang on there, right? Now, so in terms of the PE ratio, as much as you can, we want it to be cheap because we want to buy a good business at a cheap price, right? Generally, very broad stroke, if the price to earning ratio is less than 16, is relatively on the cheap side. So what does it mean? Yeah, so 7.16, what does it mean? It simply means that 7.16 is divided by 1, right? Yeah, which also means that for every dollar of earnings, right now investors are paying $7. Yeah, so remember, less than 16 is really on the cheaper side because for some sexy stocks, the PE ratio could be 100, 200, 300, 400, 1,000. Yeah, there was once Tesla's PE ratio reached about 1,002. Yeah, so 7 is really, really low. Yeah, so let me just clear this. And then the next one you can see, let's look at the debt, right? Now, usually for companies, we want to have a low debt, but the debt is extremely high, 1.5. Yeah, so when I look at the numbers, somehow it doesn't look like a Buffett kind of company, right? But what is something that he saw that we didn't see? Yeah, so I'm going to share with you some things that are not found inside numbers. So investing is not just look at, uptrend, pass, then fail, buy, don't buy, and so on. I think we better look at detail, because when Buffett do things, there are some things that he can do, but we cannot do. So let me just share with you the 5 reasons that at least I think, right, that may be the reasons why Buffett bought Occidental Petroleum. Now, so number 1, as of now, right, the oil and gas actually generally is a good hedge against inflation, and partly because of this Russian invasion of Ukraine, right? And then right now people are talking about renewable energy and so on. So in terms of digging for more oil, it has declined over the past 5 years, which means that the supply has dropped, and then because of war, there's an increase in demand. Yeah, so in other words, you can sell oil at a higher price. And then of course we want the return to beat 7.745 and see whether the Buffett did a great job in this. So number 1, one of the reasons why we felt that Buffett bought the stock is currently because of the war, right? Oil and gas is a good hedge against inflation. So that's reason number 1. And the second thing is Buffett did something that people like me and you, we cannot do. Yeah. So what happened was Buffett first invested in a company, right? By buying its preferred shares. Yeah, preferred shares. So usually preferred shares comes in some form of guaranteed return. And in this case, right, a Buffett investment is being guaranteed a return of 8% per annum. Now, 8% beats 7%, right? Yeah, so this one is really better, preferred shares. So you realize that he doesn't have to queue up 4 hours, buy some bank's interest, 3%. Can you see? Preferred shares. But that's not all. So that's the first thing. Yeah, he can beat inflation, right? The second thing is the deal when he invests, right, comes with warrants. That means you have the legal rights to buy stock at a certain price. And this warrant gives him the rights to buy Oxy, right, at 59.62. And currently the price is here, which means that if he exercises his right to buy the stock at 59 and he immediately sell at 71, that will be an immediate return of 20% plus his 8%, right, per annum. So that's 28%. So that's the Buffett kind of style investing, right? And in terms of absolute amount, it's more than 900 million. Good, huh? Okay, it's better than Temasek investing in FTX, right? Then lose 200 million. Okay, but there are no Buffett, right? So number 3 is when Warren Buffett start buying Oxy, it was in Q3 2019. During that time, the price was on the low side, which is 47, because right now it's 71, right? So remember, he want to buy a good business at a really cheap price. So through his eyes, 47 is considered cheap. Considered cheap, right? So this is the 3rd reason. Now the 4th reason is Warren Buffett wanted to, Warren Buffett's way of investing is he want to put his money into a business where it's managed by a good person, a good management. Yeah, if it's a bad management, why would he want to put so much money, right? Yeah. And the CEO currently that's managing Oxy, right, is called Vicky Holub. I don't know whether I pronounce his name correctly, but it's Vicky. And Warren Buffett has once said, so somebody quoted, right, she's running the company the right way. Now, we need to understand that as investor, right, as investor, we are giving our money to somebody else. Yeah, so Oxy Petroleum and NoonTalk, I mean a clear winner will be Oxy Petroleum, right? So what does it mean? And the reason why Warren Buffett want a good management to run the company where his money is inside, right? Because Warren Buffett do not know how to manage the business himself. Yeah, he know how to invest, but he doesn't like to do it operationally. So it's important as investor, right? We want to pass our money to someone with good integrity and of course can grow the business. So is Buffett's opinion that Vicky is a great CEO? So that's number 4, right? And the last one, interestingly, this Oxy Petroleum is like the Walmart, right, in the oil and gas industry. It's a low-cost producer. And just to let you know, because he can produce oil in just US $40 per barrel, and because they can produce it cheap, they can sell it at a high price, right? So this is one of the reasons. And just to let you know that this Oxy is also one of the biggest producer, in the Permian Basin, which means that they are one of the largest US oil field. So in short, these are 5 key reasons that I felt that is the reason why Buffett want to buy this company. But remember, I didn't go interview Buffett, right? And then Buffett didn't tell me this 5, right? It's through many information, so I pulled out this 5 and then I shared with you this 5. Yeah. So right now, of course, you have to ask yourself, is Oxy Petroleum something that is worth considering? Yeah, yes or no, doesn't really matter, right? Because we got 4 more companies. Yeah, so the next person we want to talk about and his investment, right, is called Charlie Munger. So I'm going to hand over to Hillary, and Hillary has put in a lot of effort to do up all these slides, right? Yeah, so Hillary, over to you. Thank you.
This is Hillary here. So later, after Caden has shared about Warren Buffett, so I'll be proceeding to share with other 4 value investors. So first off, I'll start off with Charlie Munger. Okay, so who is Charlie Munger? He's actually an American billionaire investor, and he was actually a former real estate attorney before he becomes an investor. So currently, he's the vice chairman of Berkshire Hathaway, and he's also best known as Buffett's closest partner and right-hand man. So let's look at what is his investing strategies on how he picks stocks. So he prefers to invest in high-quality business with superior competitive advantages, which is known as an economic moat. So what is an economic moat? If you see on this picture, you see that there's a castle and there's a water body and some attackers. So the castle is actually the company, and the water body, the moat, is actually a protection. So you imagine that the attackers are the competitor of the company. So when there's a competitor, they definitely want to take hold of the company's market share. But if the company has a very wide moat, the attackers will having problem to take away their market share. So this is what an economic moat is. And also, Charlie Munger likes to invest in business that value long-term growth. That means he likes businesses that focus on long-term growth and where the business owners wants to grow the company in long term to make profit instead of the pump and dump scheme. Okay, so right now we'll look at some of his performance and also his portfolio. So we'll look at his historical performance where we find out what makes Charlie Munger a very famous value investor. So he actually generated 19.8% of average annual return in his own investment company before he joins Berkshire between 1962 to 1975. As it was shown here, between this period, he generated 19.8%, whereas Dow Jones, S&P 500, they only generated about roughly about 5%. So this is why it makes Charlie Munger famous. And currently in his portfolio, his top holding stock is actually Bank of America, which takes up about 42.5% of his entire portfolio. Okay, so when I was doing my research, I found out that Charlie Munger actually did not purchase any stocks in 2022, but he purchased stocks in Alibaba, where he purchased it for 3 times in 2021. And he has created headlines when he made this purchase is because when Alibaba was price dropping, Charlie Munger keep on purchasing the stock. But he has to sold 50% of the stock when the price continues to drop. So for this session, we will find out like what triggers or what led Munger to purchase this stock 3 times before he decided to cut loss. And this is not a say that right now is a good time to buy Alibaba. So currently in his stock portfolio, he has 14.58% of BABA in his portfolio. So Alibaba is a Chinese multinational technology company where it's the world's largest online and mobile e-commerce company. So it operates China's online marketplace, which is Taobao, a customer-to-customer online platform to sell products and also merchandise. And Tmall is from business to customer online platform. Okay, so right now we'll look at some of the numbers. Okay, so this criteria are actually a quick screening about the company, but it does not mean that BABA is a good company. But it's just for you to find out like why Munger decided to purchase Alibaba for 3 times in 2021. So when we see here the revenue is actually increasing year on year, which looks very good. But when we look at its earnings per share, and this is the mathematical formula of earnings per share, we notice that even though earnings per share is keep on increasing, but in 2022, there was a huge drop. So when we investigate into their annual report, we found out that actually during this year, BABA had a drop in their interest income and also their investment income, which is why their earnings dropped drastically in 2022. So next, we will also look at their PE ratio and also debt to equity ratio. So for PE ratio, as earlier Caden has shared, we want it to be as lower than 16 as possible. So currently, the PE ratio for Alibaba is about 37.85, which is considered quite expensive. However, we should take note that during the time when Munger purchased BABA, it was during here, and we see that it's actually somewhere below 30, and it also went somewhere around 20 during that period. Okay. Next, we look at debt to equity ratio. So based on value investing methodology, we wanted the debt to equity ratio less than 0.5. So what does this mean? This means that for every $100 of the equity, we want the company to take less than $50 of the debt. So for here, BABA actually has a debt to equity ratio which is about 0.19, which is considered lower than 0.5. So this is a quick analysis about the stock that Munger purchased in 2021. Next, we will look at the next investor, which is Joel Greenblatt. So who is Joel Greenblatt? He is an American value investor and also a founder of Gotham Capital, a hedge fund. And he's actually an adjunct professor at Columbia University Graduate School of Business, and he's also the author of the little book that beats the market. So he's the inventor of the magic formula investing, where he shared in this book. So his investing strategies is definitely based on magic formula investing. So what is this about? So this investing method helps him to look for cheap and good companies. So how do you define cheap and good companies? Which he looks for companies that has high earning yields that makes the company cheap, and also the companies that has high return on capital that makes them a good quality companies. Then from there, he will rank the stocks based on the sum of these two criteria rankings, and the higher the ranks, the better is the company. So this is what magic formula investing is about in a very layman term. Okay, so right now we'll look at his performance and also portfolio. So based on his historical performance, he managed to generate about an average of 33% of annualized return during 1988 to 2004, which is from this chart where the source is come from his book. So when we compare between S&P 500, we can see that his magic formula during that period managed to beat S&P 500. So next, we'll look at his portfolio. So for him, his largest holding stock is actually an ETF from his own Gotham hedge fund, so known as GSPY. So here shows the top 10 holdings of the company within the ETF. So I'll pause here for a short while to let you have a quick look on which are the top 10 companies within this ETF. Okay, so next, we'll look at what are the latest stock purchased by Joel Greenblatt. So he purchased quite a few stocks, but I'll pick up Exelon Corp because this is one of the largest purchased. So he purchased about 373,000 shares in Q2 at an average price of $47.02. So currently he owns about 0.63% of EXC in his portfolio. And what is Exelon? Exelon is actually a utility service provider in US where they provide electric power and also natural gas to 6 states in the US, which is in this location, on both on the west side and also on the east side of US. Okay, so right now we'll look at a financial statements of this company. So the same, when we look at the revenue, it's also increasing year on year. And for the earnings per share of the company, I can't see a very clear trend of it. So it's kind of like, it's slightly upwards, but then for the past 2 years, it's been on a downward trend. So it's a bit mixed signal for here. And for the PE ratio currently, it's at 25.48. But when he made the purchase at $47.02, which is at Q2, so we see that the PE ratio is around 15 or 16. Okay, so next we also look at the debt to equity ratio, which is 1.23. And something to take note is that the debt to equity ratio has been slightly increasing. So should you be interested in this company, this is something you should take note of when you're doing the due diligence. Okay, so next we will look at Marc Faber. So who is Marc Faber? He's actually a Swiss contrarian investor who is based in Thailand. So what is a contrarian investor? Contrarian investor means that everyone says buy, he says sell. But when everyone sell, he says buy. So he's kind of like an opposite party. So he's a publisher of Gloom, Boom, and Doom report, and he's also known as Dr. Doom because it seems like he always likes to give out bad news. And for him, he prefers to invest in real estate and also ETFs. So what are his investing strategies? He will say that stick to investing with what you know, which is what Warren Buffett says about circle of competence. And he also focuses on analyzing in terms of risk and reward. If the investment has a very high risk, he will tend to avoid it. But if the rewards outweigh the risk, he may consider to look into it. And also, he also mentions about portfolio diversification, which is what he do for his portfolio. So let's look at how his portfolio looks like. So first off, we look at his historical performance. In the last 30 years, Marc Faber's portfolio obtained a 7.35 compound of annual return. Compared to other people, it does not look very fantastic, but we'll find out why is it so. So his portfolio is made of mainly 6 ETFs, 50% on stocks, 25% on fixed income, which is bonds, and also 25% on commodities, which is gold. So why is he doing a diversification on his portfolio? It's because it's a way to minimize risk. In case one of the assets is having issue, the other assets in other portfolio will not be severely affected, like what is being shown in this diagram below. So now let's look at his portfolio. So we see that 50% is under stocks, 25% is under bonds, and also another 25% is in gold. But because from here in this ETF, there's no specific stock that he purchased, so we decided to look into the Vanguard large cap. Okay, so what is a Vanguard large cap? And first thing, what is a large cap? So from here, we will see that these are some of the companies which is a small cap, mid cap, large cap, and mega cap. So what does this really mean? So based on this inverted triangle, large cap means that the company's value of a company that traded on the stock market that worth around 10 billion to 200 billion. So in short, large cap means a company's market cap. Okay. So for this large cap, the average annual returns for the past 10 years is about 12.65%, which beats slightly against the S&P 500. And within this ETF, there's a total of 584 stocks that are large cap companies, and it covers the 11 sectors of the S&P 500. So these are the top 10 holdings of this large cap ETF. And here I'll pause out for a few seconds for you to have a quick look on the top holdings. And as we can see, Apple took the first place, about 6.78% of the weightage. Okay, so finally, we will look at Michael Burry. So who is he? So he's an American investor and also the founder of a hedge fund known as Zion Asset Management. And he's actually a former physician. So when he was doing his medical housemanship, he was actually starting to do investing as well. So he's actually famous for predicting and also profited from the subprime mortgage crisis during the financial crisis. So it actually being shot into a movie known as The Big Short. So you can see the first person, Christian Bale, is actually portrayed as Michael Burry. And now we are curious that what is his investing strategies. So for him, he's using the classic value investing based on Benjamin Graham's security analysis. So he typically picks stocks based on margin of safety. So what is a margin of safety? So you can see there's a blue line that you see is the intrinsic value of the company. And then there's also a zone known as the buy zone. So you see the difference between the intrinsic value and also the buy zone. That is known as the margin of safety, which means that the investors will purchase stock when the share price is significantly lower than the intrinsic value. So it's known as a buffer of error. Okay. So let's look at his historical performance. So his hedge fund, so before that, he has another hedge fund known as Zion Capital, where it recorded a returns of 489.34% during 2000 to 2008, which beats the S&P 500 during the same period, where S&P 500 only generated 3%. And he closed down Zion Capital before he started up another hedge fund known as Zion Asset Management in 2013. And based on the latest research that I managed to find, it recorded a returns of nearly 300%. Okay, so right now we'll look at his top holding stock. So recently, during earlier the year, he has actually sold all of his stock portfolio, only purchased Geo Group. But today's news released that he actually bought other stocks as well. But currently, his largest holding stock is actually known as Geo Group. So today we will find out what is Geo Group. And Geo Group is actually one of his latest stock purchased in 2022. So he bought about 500,000 shares in Q2, and then he increased his stake in the last quarter in Q3 to 2.02 million shares. So Geo Group is actually a real estate investment trust that specializes in detention facilities, community re-entry centers, and it has about 102 facilities in North America, Australia, South Africa, and also UK. So this is what they do, where they provide rehabilitation programs to individuals and also after they have been released into the community, which is known as community re-entry. Okay, so right now we'll look at the numbers of this company. So of course, the revenue is also on an increasing trend. However, for the earnings per share, for the past 2 years, it looks like it drops quite drastically, especially in 2021. So when we look at the annual report, we found out that it was because the company was being charged a very high tax during that year, which caused them to drop in earnings. Okay, so now we'll look at the PE ratio. So currently the company has a PE ratio of 18.92, but during the time when Burry purchased in Q2 and Q3, this is the range where the PE ratio was. And of course, the debt to equity ratio was actually increasing, which is something that investors should take note before they decided to buy or invest in the company. Okay, so to conclude all, there are some common traits that we can learn from the value investors before we decided to embark or invest in a company. So first thing is that all of the value investors, they invest in a good quality business that they understand, which is within their circle of competence. And the investors, they do not blindly follow stock tips, but perform their own due diligence before they decided to invest in a company. So they buy when the share price is cheaper, which is known as undervalue, or there's a margin of safety, a buffer of error before they purchased. And there's no one size fits all. So even though all 5 of the super investors are value investors, we see that each of them, they have their own specific strategies to do their investing. So value investing is about selecting the strategy that based on your own personal risk tolerance and also personal temperament. So with that, I've completed my part here. So I'll pass back to Caden to further share about value investors.
Hi, this is Caden. Welcome back. I would like to thank Hillary for spending a lot of time preparing all these slides, right? And there was one slide that is quite important and it appears to look simple, which is this slide that I'm showing right now. So I just need my colleague to make sure that I've shared this slide. Now, this was the last slide shared by Hillary. Now, I'm just going to reiterate what she has shared. It looks simple, but most people buy stock lose money, right? Because they didn't follow these 3 simple conclusions. Now, the first one, Hillary specifically said that we invest in good quality business. Okay, this is the first thing. Remember, value investing is buying a good business, right? That grows, right? Yeah. And then, of course, when you want to buy something, you want to understand. You want to buy a laptop, you better know what the specs of a laptop. So you need to buy good things, good laptop that you understand. Yeah. So here she specifically also said investors should not blindly follow stock tip, but perform own due diligence before deciding to invest in a company. Now, this one sounds simple, right? But unfortunately, most people don't do it. Yeah, most people like watch a YouTube video and then they put 10K, 20K, 30K, and so on. I still remember in 2021, right? In 2021, it was a bull market. Yeah, so during a bull market, a lot of YouTubers, influencers, TikTokers share tips, to buy cryptos. I still remember, especially TikTok. The videos that they do was a piece of music playing, and then the TikToker is there, and then his finger just point, and then as he was pointing, right, Ethereum pops up, Bitcoin pops out, right? And then right now you look at all the TikTokers all vanish. Yeah, so it's very dangerous for you to buy something just by following someone else. Now, if it's so easy to get rich, right, I think our DPM, Lawrence Wong, also need to watch a TikTok video. He doesn't need to increase the GST, right, and then still have to fight with the Workers' Party. So sometimes we have to think, does it make sense? Yeah, does it make sense? And even if you understand the business, you also need to allocate your money properly. Yeah, properly, because if a YouTuber, right, put 90% in Tesla, should you do it? Yeah, he can encourage you to do it, but it's your money, you see. So sometimes we cannot blindly just follow someone. Now remember, right, in any bull run, everybody is a genius. Yeah, you can come out on YouTube, right, and call yourself a genius. So you have to be very careful. So that's number one. Right now it's a bear market. We will know when the tide recedes. We will know who swims naked. Yeah. So number 2 is to buy when the share price is cheaper than its intrinsic value. But of course, the Michael Burry used this buffer, right, and he called it margin of safety. Actually, this is not a term coined by Michael Burry, but rather by Benjamin Graham, who was a teacher of Warren Buffett. Yeah. So if a stock is worth $10, you always want to buy below $10, just in case you make a mistake. And then number 3 is also quite interesting. No one size fits all investment strategy, which means that, for example, last time when I was at NUS, right, I studied this subject, which is a very broad subject called biology. So my first degree was Bachelor of Science in biology, and then we married. And then just biology alone, the NUS has to further subdivide, right, into botany, which is about plants, right, and then zoology is about animals, and then there's a cell and molecular biology. So actually, this biology is so huge. There's so many, But if you if you fall into any of this, you can call yourself a biologist. You can call yourself a value investor. But value investing got many types, right? Yeah. So it's important for us to know, to learn as much as we can, and then we find one that is suitable for us. So I would like to call myself a value investor. Yeah, but my style may be slightly from Buffett. Doesn't mean, obviously, he cannot be wrong. That also doesn't mean that I'm smarter. But it's just that our character are different. There's some things that he knows that I don't. For example, Occidental Petroleum, it looks quite attractive, but he bought preferred shares. Oil and gas, something not familiar. I'm a biology grad, so I'm going to stay away. Stay away, huh? So these three, right, are very simple but very important lessons. And I'm going to talk about one company, which is the Alibaba, right? Alibaba that Hillary mentioned, huh? Now, this is how, in this graph, is about this company called Alibaba, and there are two lines. So I'm going to share with you very important things, right? Yep. So this line with this tiny little dot over here, right? This is called earnings per share. Earnings per share. Huh? This zigzag line over here, this is a share price. Now, the first thing, right, I want to demonstrate or illustrate using this diagram, right, is when the earnings per share goes up over the long term, in between may go up and down, right, the share price will go up. So the first thing you need to know, which also means that if the earnings per share is predictable, going up, right, assuming going up, then the share price is predictable, right? Yeah, so that is an investor, because you want to buy a company where the profit is predictable. But for example, Grab is losing money, so it's not predictable. NoonTalk, if you look at the profit, it's not predictable. Even the revenue is not predictable. Then there's another company during the bull run was touted like super stock, right? It's a C Limited, Shopee, right? Yeah, it has been losing money. It's getting worse and worse. So the profit is not predictable. Yeah, so if it's not predictable, how can we sleep nicely, right? So coming from here, remember, if the EPS goes up, the price go up. If the EPS is predictable, the share price is predictable over the long run. So these are two things. So if you look at this, right, it appears that the EPS is predictable from maybe 2011, right? Yeah, to about 2021. Then something happened. The EPS dropped from $8.40 to about $3.58. So the drop is about half, 57%. Yeah, so if the EPS dropped by 57%, you expect the price should drop by 57%, right? Because it correlates with each other. But you notice that the price dropped from 309 to 63. That's a huge drop, which means that if you buy here, right? If you buy here, yeah, you're a genius, right? You anyhow buy, right? By watching a TikTok video. You buy 309, right? Right now, you'll be holding on to a stock in which you know nothing about because you don't know what's happening and you follow YouTube, right? That has fallen by 79%. So you realize that, hey, if the EPS goes up, the share price will go up, it's true. But do you notice that here, even though the EPS go up, the share price goes down in the short run? Yeah. So it's like EPS drop, but the price go up. So can you see, in the short run, it doesn't correlate, right? But in the long run, it correlates. Now, the thing is, what am I trying to say? Now, if you look at the most recent quarter, which is March, now, here is negative 0.96. That means this quarter, the company is losing money. Yeah. So when the company is losing one quarter, you don't have to be too worried, because sometimes in the business, in the short run, one quarter they screw up and then something happened. But you look at the June one, right? I do not have the September yet, right? It's 1.27. So this one turned positive. Turned positive, right? And you can see from this March 2021 to here, there's a huge drop. It's almost like 50% because of this, the culprit is this negative. So overall, wow, EPS drop, right? Yeah. So this one is based on analyst estimate. Their guess, their estimate is they estimate that the earnings per share will recover, right, from $3.58 to $5. And if the trend of EPS correlate with the share price in the long run, which is true, that means the EPS will recover by 39%. So now the question is, if the share price, if the EPS recover by 39%, will the share price recover at 39%? Now the thing is, we do not know. But we do know, based on historical fact and scientific study, right, done by Professor Robert Schiller, is when the company's profit goes up in the long run, maybe 5 to 10 years, the share price will go up. So in case some of you are holding Alibaba, you saw Charlie Munger, sell away some of his stocks, right? You're panicking and so on. So I'm not very sure, will this give you some form of comfort? Now, so in this graph, I also want to share with you one very important lesson, right? We must understand that whenever bad things happen, gamblers who know very little about what they hold, they will quickly sell away their stocks. And because of that, share price tend to drop very quickly. So first lesson, right, is remember Mr. Market loses confidence very quickly. That means the share price plunge really a lot. So in this case, remember, the EPS only dropped by a certain percentage, right, but the share price dropped a lot. And remember, it gains confidence slowly, which means that if right now you're owning some Alibaba stock, and then you see the share price plunge, like committing suicide, right? Yeah, it's just the nature of the stock market. It will take some time to recover, and it will recover provided the earnings per share goes up. Yeah, so your time horizon must be very far. So this is to give a bit of details, right, regarding Alibaba. And remember, sometimes when value investor or good investor sell, right, doesn't mean there's a bad thing. Yeah, people sell stocks for various reasons. One of the key reasons is maybe it's really a bad stock, so they sell away. The second thing is maybe they found a better alternative, so they sell away. Yeah, the third one, sometimes they need the cash. Yeah, so they sell away. So there are various reasons. But of course, you go and search the internet, Charlie Munger didn't really say, oh, why I sell. Yeah, okay, so this one I provide additional info, let you ponder through. Yeah, and then Jacob say how to calculate intrinsic value. Okay, this is a sophisticated process. It may take 30 minutes to explain. Yeah, so maybe one of my colleagues, can you just type in the website, right? VIAmasterclass.com. Yeah, VIAmasterclass.com. So Jacob, in case you want to know more details about what we do, you can just join our upcoming masterclass, which is highly complimentary. And the web address, right, I will let my colleague type, is www.viamasterclass.com. Yeah, you'll pop up in the chat. So just click on it and then you register, right? So let me just do a summary of what we have done today. So Warren Buffett, he's holding, right? Yeah, his thing that he likes is Oxy Petroleum, OXY. You see whether does it make sense for you. Now remember, I'm not very familiar with Oxy, so I do not have any stake. And the second one, Charlie Munger, is Alibaba. You know, the price is now depressed. You know, do you think, is this something for you, Alibaba, right? Then Michael Burry is quite interesting. He has quite a huge stake. The link is already up. Now, Jacob, in case you cannot see the link, you maybe refresh your browser, right? You should be able to see the link. Yeah, just click on it. A page will pops out. Select any of it, and then join our masterclass. So Michael Burry, his stake is in this company called Exelon. Yeah, Exelon. Exelon, Oh, Geo, it's not Exelon. It's called Geo Group. Yeah, Geo Group is a real estate investment trust. Yeah. So Marc Faber, right? Marc Faber, his stake is not in the individual company, but in the basket of companies. And the ticker is called VV. It's Vanguard Large Cap ETF. Okay, I think I better explain this, right? Large cap, this cap. Now, this cap is a short form for capitalization. Capitalization. Yeah, so sometimes in Singapore context, you may hear people saying like, oh, you know, DBS is a blue chip stock, blue chip. So people want to buy blue chip because it's big, right? But big is so relative. What do you mean by big? Yep. So in the US, they don't use term like, oh, you know, this is a blue chip stock. They use a small cap, micro cap, large cap, mid cap. Yeah. So there's always this cap. This cap is simply a short form for capitalization. Yeah. So if the company is huge, it's always defined by this term called capitalization. So what is capitalization? The technical term, right, is capitalization is equals to the number of outstanding shares, or in short, the number of shares right now in the market, right, multiplied by the share price. There was one time Tesla is really a big capitalization company because the share price has went up. And then Elon Musk also like to do stock split. Yeah, one stock split into two split into four. So the number of shares goes up, right? Plus the price goes up, so it becomes a very huge company. So remember, the huge company is not defined by the number of employees or the amount of revenue. Unfortunately, it is defined by this capitalization, which sometimes can give a false impression that the company is really huge. Okay, so this is an ETF, interesting. So if you're not a stock speaker because you have not attended any class or any of our training, ETF may be something you want to think about. And Joel Greenblatt, right? His stake is in his own ETF. It's called Gotham. It's a Batman stock. Yeah, Gotham Enhanced 500 ETF. So again, it's a basket of stocks. Yeah, basket of stock. So out of these five super investors, you have these two who's focused on ETF, and the remaining three are individual stock picker. Yeah. So I think by the end of this evening, you will have at least 5 companies to think it through, including the 2 ETF, right? Yeah, so it's very important for us to know what is it all about in which we are trying to do, and to know what not to do. So I told you about the noon talk, right? And of course, to invest, you need to have cash. Yeah, if all along you have been spending money, every day give you bear market also no use. So you have to have cash to invest. Yeah. So other than these 5, I just want to share with you a very good opportunity. Yeah, if you are grad or non-grad, maybe we have a chance to see each other face to face, right? Now, for our graduates who have attended our 4 days value investing program, which is our flagship mentorship program, right? We have been meeting our grads online, on site, right? Every single month without fail, rain or shine, since 2010. So this is one thing we support our graduates. But because of the past 2 years, coming to 3 years of pandemic, we are unable to meet them face to face. Yeah, face to face. So first time, right, in 2 years and maybe 8 months, we have decided to organize an on-site gathering. And this gathering is no ordinary gathering, right? Because in this gathering, we're going to prepare you, whether you're grads or non-grads, we're opening up to you for the very first time. And it's also, we're celebrating 12 years of VIA history, right? Survivorship. So let me share with you what's interesting so that we can make all of you a better investor. So during this VIA Christmas investment gathering, right? Yeah, it's open to you and any of your friends. So you're grad, non-grad, it doesn't matter. Yeah. So later on, I'll ask my colleague to put the link, but hang on there first. So let me just share with you what the gathering is all about. Now, the gathering is going to take place Thursday, 15 December. Now, it's on site. So in case you're overseas, right, you can ignore this. Okay, the venue is NTUC Center, 1 Marina Boulevard. Don't worry. Subsequently, when you register, my colleague will email you the details. And it's an evening on site, face-to-face, right? 7 p.m. to 10 p.m. Registration will start at 6:45. So you have to leave your office on time. Now, let me share with you what we're going to do for you. So 7:15, I'll spend a few minutes sharing with you opening, right? What this gathering is all about. But the most important thing, right, is we have 2 key highlights. The first highlight is we have managed to secure an engagement, right, with one of the representatives from Philips Securities, which is one of the largest private brokerage firm in Singapore. And they will share one Singapore company through their perspective is good and undervalued. Yeah, so in other words, when you come, there's actually one company for you to think it through. They'll spend about 30 minutes talking about this company. Just now we spent about 5 minutes, right? So this is quite detailed. Then after that, we'll go for a break, which is a dinner. So it's a buffet dinner, right? Yeah, so we put delicious buffet. Now remember, these pictures are for illustration purpose only. Yeah, but it's going to be a nice buffet dinner. So after buffet dinner, when we come back, right, there will be a speaker number 2, and there'll be one rep from TD Ameritrade, which is the largest US brokerage firm, in US. And so one rep will talk about one US company. So which means that when you come, these 2 representatives will share 2 companies, one Singapore, one US, and you can think it through whether does it make sense for you. And the best part is to end with a highlight. We're going to have a lucky draw with attractive prizes. Right? Yeah. Then after that, we end. So let me share with you some of the attractive prizes. We want to find useful one. So a hair fryer, coffee maker, power bank. Yeah, not really very, very expensive stuff, right? But most important is they must be useful. So these are the things. So can you imagine attending on-site gathering, you have a chance to interact with me or some of the speakers. So just these 2 speakers alone who is going to share with you, right? The 2 companies, I think if you buy any tickets to such an event, it could be like $88 or maybe $100. But just to let you know that we are doing this for charity purpose. Every single cent of the fee that we collect, right, from the booking of the tickets will be donated directly to National Cancer Center of Singapore, because I'm the ambassador. So this is a charity event, so that's number 1. Number 2 is a no sales pitch event. So in other words, during this event, you will not hear any one of us trying to sell you a few $1,000s of cost or 120,000 of cost. So don't have. Yeah, because it's our gathering. Okay, gathering. So these 2 things, right? Now, so there's going to be a small ticketing fee. Remember, it's for charity purpose. Yeah. So I just need my Leong says, is the event recorded? The answer is no, it's on site. So I just need my colleague to post the link, right? Post already, okay, so the link is posted, right? In case you cannot see the link, can you just refresh your YouTube so that you can see the link? The link is already up. Yeah, so when you click on the link, right, just to let you know that the first ticket, which is you, will be $25. So we are using this $25 to pay for the food and so on. If there are some excess, right, we are going to donate away, right? And you can also bring your friends, which includes your children, your wife, and so on. So the second person, we give a huge discount. It's not 25, but it's only 10. And you bring 2, right, it's only 15. And bring 3 is only 25. Just to let you know that all these things are actually is not sufficient for us to pay for the rental plus food. Yeah, but because it's for charity purpose, we want to make it very affordable, especially during the pandemic. Yeah. So if you click on the link or you use your phone to scan this QR code, something pop out, you click on it, right? You will reach a site that looks something like this. Yeah, so you will see the tickets. So just click on this button over here. Once you click on it, you can select. So for example, here's 1 + 1, 1 + 2, 1 + 3, or it's just yourself. Now, sometimes people say, hey, Kaden, but I'm not very sure whether my friend will come or not. It's okay, right? You can just do 1 + 1, right? Number 1 is, I mean, it's an extra, like, how much? Let me see. It's extra $10. Oh, come on. Okay, it's extra $10. So your friend don't come, do you lose $10? Because $10 go to charity, right? You can see from the angle that you're donating this $10 to charity. So that's harmless, right? It's harmless. Yeah. So you, by default, if you want, you can select 1 + 1, bring your friend and so on. So remember, you can be a grads, non-grads, and so we'll open up for everyone for the very first time. Yeah, after 12 year history, right? Yeah, so you can click on this, then you can select. So whether you click on this 1 + 1, 1 + 2, 1 + 3, right? There's only one drop-down menu of 1. So you just select the 1. Okay, select the 1 over here because there's no 2 and so on. Okay, so just select 1, right? So drop down, there's 1, drop down, there's 1. Yep. So once it's selected, you just click checkout. Once checkout, of course, you need to key in your information, credit card number and so on. Okay, so you can see the fee over here, 1 + 1. Or 35. I mean, $35. You have food. You're lucky draw. You have 2 companies. Wow, it's the most valuable investment on the planet, right? Yeah. And then right now it's bear market. You miss this, you want to wait 8 to 10 years. Okay, got it, So this also mark my last slide for today, so we can keep it within about maybe an hour. Usually we spend a lot of time, but I think 1 hour is okay. Yeah, so the link is already there. So remember, this is not a recorded version. Once you miss this, maybe you have to wait in terms of years. Okay, Yeah, so I'll be here for the next maybe 8 minutes or so, just to chit-chat with you. So this is what the value that we have provided here today. So just take note, right? We represent VIA. VIA stands for Value Investing Academy. We have been around since 2010. And our mission is we care to make you a better investor. And our charity Christmas investment gathering is really to help you. And then at the same time, we're doing something good. And this charity event will be our 3rd one this year already. Yeah, we've been doing quite a number. Yeah, so with that, ladies and gentlemen, have a good rest. If you have already signed up for our Christmas gathering, have a good rest. And if you have not, the link is already there. Please click on it and then register by filling up the necessary information. Okay, so the timer already started. It should be 7 minutes plus. So I'll be here chit-chatting with you. If you have any question, right, please feel free to post your question in the live chat. Me and Hillary, we are still with you talking about this. Yeah. Okay, but in the meanwhile, as I'm talking, click on the link, register this. Just to let you know that I think the number of seats that we have is about 20 plus. Yeah, so the Eventbrite has a limit, right? We have set a certain limit. Once it touches this limit, or you think for like 10 years, the seats will be also out. It's like cinema, right? There's a certain limit to the seat. Zen said previously I registered for the event, received the announcement in the chat regarding, but I don't think I got that email, Zen. Okay, so maybe Irfan, right? Maybe you take a photo of this Zen and then you send an email to Adeline. Yeah, ask Adeline to fill up. Zen, if you don't mind, can you just put your full name over there? Because Zen alias, we do not know what's your full name. Right? If you do not mind, just put your full name that you have signed up. Yeah, so that we can ask your staff to cross-check and then she can personally message you. Yeah, then don't mind, can you just put your full name that you have registered so that tomorrow, first thing in the morning, we reach out to our staff. Our staff is Adeline. Adeline is in charge of sending out the email. By the way, in case some of you registered and you didn't receive anything, can you just check your spam box? Oh, Zhen Hong, yeah, Zhen Hong, okay, Zhen Hong, okay. Zhen Hong, you know. Hey, Zhen Hong, you can also email Adeline, Adeline. But it's okay, we'll let Adeline know. Yeah. Okay, so Zhen Hong is our grad, right? we will not makan their $25. So don't worry. We want people to come, right? So that it's a vibrant gathering. And we have not been like organized on-site gathering since the beginning of the pandemic. And this is really a very good time for us to chit-chat each other. So 2 companies. Okay, 2 companies plus food plus lucky draw. It's a no-lose registration. Okay, so about 5 minutes more for you to register. Yeah, for those people interested, you register for 1 + 1. You know, whether your friend come, don't come, $10 you donate to charity. So you see it from that perspective, right? Do good, the word is round, right? Yeah. Other than this, any other question that you want to ask? Yeah, so Wendy, have a good rest. If you already registered, yeah, have a good rest. Yeah, I just changed the background picture a bit, so that, you know, so that it looks nice. Yeah, very good. My colleagues has posted a link one more time. Yeah, eat, learn, and win. When I met Mary Buffett about, I think many years ago, I think 2011, right? She said, learn and earn. Right? You want to earn more, of course, you need to learn more. Right? I don't think anyone can earn a lot more by knowing nothing. Yeah, so this one. Talking about buffet, suddenly I become very hungry. Yeah. Any other questions? So this is the program highlight. If you want, you can take a screenshot. So about 4 minutes more, we can knock off, right? Yeah, buffet, you know, illustration purpose. Yeah, this is the location. Don't worry, you'll receive the welcome email, right? But if you're concerned, you can also take a photo of this so that you know where is it. 1 Marina Boulevard. Yeah, here's 7th floor, 7th floor. Yeah, I should have added 7th floor, 7th floor. Because there's a 7th floor, 8th floor, 7th floor. It's a very beautiful place with glass panel overseeing Marina Bay Sands. As a value investor, what's the strategy in case of a crisis recession? I'm not very sure your 2 words, crisis recession. What's a crisis recession? A recession is a recession. A crisis is a crisis. What do you mean by crisis recession? Maybe you want to specify what's a crisis recession. Right now, we are not in any recession. Singapore's GDP has gone positive. So Singapore has not in a recession yet. US, right? If you follow the general definition of technical recession, is consecutive 2 quarters of negative GDP growth, in which they are. Yeah, so negative is supposed to be recession, but Biden administration denied that it's a technical recession because there's a strong growth in the employment. So people get employed. And then after that, the GDP went positive. Okay? So recession, then not recession. Yeah. So right now, US not in recession, but again, debatable whether recession or not recession. Right now, it's definitely a bear market. Major crisis similar to Lehman and recession. Yeah, Wendy, your question is quite broad, but I can, because it's broad, I'm going to reply broadly, right? Yeah, broadly. Now, so for example, let's say right now there is a recession, which is defined by the 2 consecutive negative growth of GDP, right? Yeah, such as maybe in March 2020, the most recent one, a global financial crisis 2008-2009, Lehman Brothers. So if today we are in a recession, right? I'm just guessing your question is, what would I do as a value investor? Yeah, what I would do is, number one, now remember, I'm just saying what I do. This is not a recommendation. What I'll do is I pump in more cash into my investment account. So this is the first thing. Yeah. The second thing, right, is if I have some companies which are still good, I'll buy more. I'll buy more, so I'll average down the share price. Yeah, if the company is still good. But if there are some companies that will be permanently damaged by any form of crisis, then I will get rid of the stock. Yeah, so that's the second thing. And the third thing is, during recession, if I discover more companies that is good at a cheap price, then I'll buy those sort of companies. Yeah. So, of course, if some of you are our US case study subscribers or SG case study subscribers, you know we always buy a good company at a cheap price. Yeah, because the question is quite generic, so I'm going to answer a generic way. So 3 things. Number one, first thing is buying more money. After I buy more money, the next one is to average down if the company is good at cheap price. Second one, if it's a company that's permanently damaged by the recession, right, I'll get rid of it. Yeah, even as at a loss. Then the third one is I'll find new good companies and buy at a cheap price. Three things. Warren Buffett predict a major crisis looming. I don't think Warren Buffett predicts. Yeah, he doesn't like to predict economy, right, or interest rates. Yeah, so I'm not very sure the source of your video. Maybe he will say some comments. Yeah, I think he once said that if economy is predictable, right, the billionaires will be economists, but you don't see any, right? Yeah, you don't see any. That means it's not predictable. Yeah. So in case you subscribe to some software that they said they can predict share price, you have to think it through quite carefully. Yeah. Remember, if there's a software that can predict share price, the billionaire or trillionaire will be the software programmer, not you. Not you, right? Sometimes that crisis is quite limited to location and so on. Yeah, so Zen is also correct. Sometimes crises are not global, like the 2008, 2009 global financial crisis, but is very specific to a certain country or a certain industry. Like for example, the real estate in China, I think it's quite bad. I'm not very familiar, but the Evergrande situation has triggered a lot of things. Yeah, so that's one. So I think in China, I think there's a real estate crisis. Then another crisis, I think, is in the crypto world, right? But I don't buy any crypto. I don't believe in that. So FTX collapsed, and then previously there are many other crypto exchanges collapsed. Some crypto lenders also collapsed. Yeah, so right now it's a crypto winter. Yeah, crypto winter. But so crypto's price dropped, but because cryptos are worthless, right? At least from my perspective, yeah, since they're worthless, there's nothing good. So I won't buy even if it's cheap. You don't want to buy something that's cheap and worthless, right? Yeah, so I won't do it. But for those people who are crypto investors, because it's your money, you make the choice. So I wish you all the best. But it's something that are not good, so I think I better stay away. Okay, so the time's up already, huh? Yep. Any other last question before we end the Zoom? Okay, don't have? Yeah, so remember, the link is already there. Our Christmas last call, right? After that, no more. Yeah, our Christmas gathering is on the 15th of December. Here, these are the things. Yeah, don't worry. When you register, right, tomorrow, one of my colleagues, Adeline, will send an email out. I'll remind her to send out a message as well, in case the emails go to a spam. Yeah, and I'll specifically let Adeline know about Zhen Hong's one. Okay, got it? For those people who lost connection like Wendy, it's okay. You can watch the replay. Got it, for the reply, right? So, ladies and gentlemen, thanks. Have a good rest. Tomorrow is Friday. Woohoo! Friday is here. So, I wish all of you a good weekend ahead. Stay safe. And remember, right, we are VIA. Our mission is we care to make you a better investor. So, with that, I shall see you in our Christmas investment gathering. Okay, so see you soon. Goodbye. Thank you.